I think it's a bad precedent and it will not work. And I don't think the BRICS countries or emerging economies will let themselves be blackmailed, because the US dollar is not all that important anymore in the trading of goods, in the trading of capital. It's still a huge thing, the dollar, still the dominant currency in the world and the dominant component of foreign exchange reserves. But for trade, you have much more trade essentially between China and the emerging economies that is carried out outside of the US dollar. So I think that these are desperate measures that will actually backfire against the US. Maybe some neocons in the US will think that they have the power. In my view, they don't have the power anymore, and it will be perceived as a very negative measure. I suspect that most emerging economies have a relatively negative view about Western dominance. The dominance manifested itself first in the colonies since the 17th century, and more lately in trade and in institutions such as the UN and so forth. So my view would be actually that Western world would do well to be more concerned about emerging economies, and in particular the BRICS bloc, and not provoke them. That would be my view. Some countries will not keep all their money in US dollars because they've seen how the US can seize assets. They don't want this to happen again to them. So they're moving out of US dollars. But a large portion will still stay in US dollars. But these dollars may be anywhere. They may be in London. These are London dollars or Euro dollars, as we call them. And some dollars may be in the US. Actually, to tell you the truth, we don't know exactly what will happen. And in this environment, I think that large or important decisions may be postponed. The tariff idea, to start with, is a very bad idea. But some people will disagree with this. But in general, countries that have imposed high tariffs, they have a higher level of prices domestically and are less competitive globally. So my view would be to avoid tariffs at all costs. But this is not the view of many economies in the United States. They think the US is sort of giving away some things to emerging economies, when in fact the US has benefited from global trade, and especially from the weapons trade. They've benefited a lot by creating problems around the world and then selling weapons to these impoverished countries. I've seen many countries, they had dual currencies. They had, say, a financial dollar and a trade dollar. And the trade dollar was lower, so they remained relatively competitive in trade and artificially high in financial assets. But usually the countries that had this dual currency, it's ended always in a massive devaluation. And that's why I'm against it. I've just written a report and I say the Trump top. Since July, I've been arguing that we are at major turning points in asset markets. We have to distinguish consumer goods inflation for services and the inflation of assets. The inflation for assets is usually called a bull market. So in other words, when real estate prices go ballistic, people call it a rise in home prices. They don't call it an inflation in home prices. But the cause of rising home prices is the same as the cause of rising coffee prices. It's too much money printing and too many fiscal deficits by countries. In other words, the countries, they spend too much. They print money and they give it to their citizenship. And as a result of that, the citizenship, the people can buy goods and services and assets, but the debt level of the government increases therefore. And this is not a sustainable economic policy, in my view. Now, some people dispute that. They say, oh, government debt doesn't matter, it just goes up and so forth. But no, it matters, because the interest payments on the debt also goes up. Then all the other expenditures combined, heading towards an incredible, disastrous outcome. But in the meantime, people say it's okay, and that Wall Street loves rising asset prices. They will never argue against rising asset prices because Wall Street lives from rising asset prices, because the more money there is in the system, the higher the fees are that Wall Street can collect from the innocent public and the naive public that believes that the government should intervene, that the government should spend money. Whatever the government touches is a disaster, has been proven in every country. Currency has lost purchasing power over the last 80 to 100 years, but massively so. The dollar today doesn't buy the same goods that the dollar bought 50 years ago. Just when you walk by an antique shop or, junk stuff market, try to find a menu of McDonald's of the years 1960, 1970. Since then, the value of paper money has diminished enormously. If I had assets in 1970 and I was concerned about the depreciation in the purchasing power of paper money, I could have bought gold at $35 an ounce, or I could have put $100 or $1,000 or $1 million on deposit. And every year, the interest on the deposit in the 70s went up, and in the 80s and 90s, and until recently it went down. But say, if I just earned 5% per annum compound, it's a higher return. Yeah. With an ounce of gold, I can buy actually today more hamburgers than in 1960. Too many people benefit from money printing. If I look at the 1970s, 1980s, the Dow Jones was at less than 800 in August 1982. It was no higher than it had been in 1964. So it was 18 years of a sideways movement in the Dow Jones average. But because of money printing, afterwards the market went ballistic, and It made a lot of people very rich. If you look at the economy, we have to distinguish between the economy of the wealthy private plane owners, the yacht owners, and so forth and so on, and the economy of the typical household, man, woman, and 2 children. Most households, their standards of living is down. And I can prove this. If you look at the affordability of homes in the US, Goldman Sachs publishes charts about this. The affordability is at the lowest in history. And then the economists, they tell me that everything is fine in the United States. Kohl, Target, all these retailers announce disappointing results. And the economists in the US that work and are paid by Wall Street and the Fed and all these elites of the financial service industry, they tell me everything is fine. It isn't everything is fine. No, the debt is going up at a faster pace than nominal GDP, and the standards of living of the typical American family is going down, period. Germany is a living example of how the socialists and communists that all under the umbrella of the Greens and socialists and so forth, how they can destroy a well-functioning economy. But people don't believe it, and they keep on voting for complete incompetent people like Trudeau and Scholz and Baerbock and Macron and all these characters. It's a disaster. But the disaster will be obvious soon also for the rich people, because as I said, I believe that the asset inflation is going to turn down and that people will lose a lot of money that are in assets. I'm tempted to hold a lot of cash, but I'm concerned about cash deposits because of the banking system. Some countries, people have lost everything that had their money on deposits. It's not safe anymore. If you want something safe, you have to own precious metals. I'm not saying it can't go down in value, but I'm suggesting that it's relatively safe to hold precious metals. My advice to people is you should have discipline in investments. There's no risk in gold going below, say, zero. And it's unlike a company that can go bankrupt. Gold will not go bankrupt. Can it go down? Yes. But that's why I suggest you have a disciplined approach and you buy every month some gold. And depending on how much you already own, you buy more or less. I have always maintained an clearly thinking individual in the world must see that the central banks are fraudulent institutions that are out to destroy the value of paper money by printing money and giving it to the government. People don't see it clearly. It's interesting that although the price of gold has gone up, there's no euphoria in gold. There's even less euphoria in gold shares. Gold shares are a complete disaster. I think Bitcoin is a very different instrument or animal than gold and silver and platinum. You and I and nobody knows exactly what the value is. Can Bitcoins be duplicated with other cryptocurrencies? Yes. Can gold be duplicated with, say, other assets such as paintings, collectibles, Ferrari cars and so forth? Yes, to some extent. But it's difficult to go to the jungle with a Ferrari and even more so with a Van Gogh and sell it to a local for its value. Whereas if you take a coin of gold, most people in the world will actually accept it. Inhabitant of a tribe in the Latin American Amazonas or in the jungle in Africa is unlikely to realize the value of a Van Gogh. He will think, who is so crazy to consider that this is a nice painting? A gold coin they will accept. A Bitcoin they may accept if there are internet connections or mobile connections. If you don't have that, it's a little bit difficult to transact in Bitcoins, especially when they switch off the lights in New York or in a big city and they switch off the mobile waves and so forth. So how do you want to transact with a credit card and with Bitcoins and other instruments of credit? Whereas with a gold coin, you can always transact somewhere. Platinum hasn't moved at all and is at the present at an extremely low level relative to gold and silver. So I'm not suggesting sell all your gold and put everything into platinum. But if someone says, okay, I agree with you, Mark, that we all ought to own some gold and silver and platinum, but I'm sorry, I should have listened to you 20 or 30 years ago because now the price is relatively high. To him, I would say, look, if you're concerned about high prices in precious metals, here you have platinum that hasn't moved at all. So I would actually accumulate now platinum quietly. It may take 5 years until it moves, or it may happen next week. But I can tell you, when I look at the performance of narrow markets, in other words, thin markets, like cocoa, coffee, and platinum, these commodities can easily be squeezed. Since most of the platinum is in South Africa and in Russia, I wouldn't rule out that they'll be squeezed one day.